Okay, welcome to the Swing Trading with Cycles channel. This is where we time the market without predicting the market. We look at trend analysis objectively. We observe what's happening with price action, and we use that to make our decisions. So we'll start with silver here as opposed to gold. So in this video, we'll look at silver, we'll look at the daily cycle, the weekly cycle, the long-term cycle, and then we'll do the same for gold. And then finally, we'll do that same thing for GDX. So, and as always, there are links in the description to Cycles 101, written and video content. You definitely want to make sure you take a look at that so you have a sense of sort of what we're talking about. And so this is the daily chart for silver, and these are the CFDs, so not the futures. Those prices will be slightly different, but I assure you the pattern is exactly the same. This line here is your 10-day moving average, and you can see these numbers here are just, the counts for your last daily cycles. So the daily cycle, the last unequivocal daily cycle low we have, theoretically, is from August, or actually September 1st. That was day 35 of that cycle. So we had this move up here, and then we came down. So this is interesting, right? It was right translated because we spent 22 days going up, and I'll zoom in to make sure that we can all see what I'm talking about. So we spent 22 days going up. This was a slow start, and also notable that this looked like it was going to fail in real time. That's important to note. That's just the way the metals trade. Certainly that's how they're trading now because we're in this kind of bearish phase long term. But this was kind of a surprise, this move up here after this. This definitely looked like it was rolling over. But we did not. We kept moving higher. We then had this little pullback, which still made another higher high. And we finally topped out on day 22, which is right here. And then we declined for approximately, 13 days, right, to get to a day 35 low. The problem, right, is we actually made a lower low. So those are two different concepts that are obviously correlated. Is left translation, right? So cycle translation, right or left translated, and then cycle failure, right? A cycle is said to have failed when it goes below the any previous cycle low, which, if you think about it, and that's just another way of saying it's a lower low, right? I say this constantly. It's about the price action, not the cycles. Cycles are secondary. The price action is the primary thing that you want to understand. The cycles are just an additional little tool. And so we had a longer advancing phase than a declining phase, but the declining phase was still pretty aggressive in terms of the actual price decline. And so that's an important thing to understand. You could have a right translated cycle that's still bearish, which is what we had here, right? And so we had a low on day 35, and then we rallied for 7 days, and that was up to this high here. And then we kind of bull flagged. We toured around here. We looked like we were going to break down, but then we had another big rally, made a higher high, right? And so I actually had drawn this 7 here, right? Because at that time, that was the high for the cycle. And at the time, and when we started getting this decline here, it looked like we might be making a lower low, but instead we got a recovery. So this was you can think of this as a day 7 high, but the DCH is actually day 23. So I'll actually just get rid of this to not have any confusion. Now, you could certainly say, well, wait, what if this is just a short cycle? That's fine. I talk about this in my videos. Again, going back to that point, it's the price action that you want to focus on, and the cycles are secondary. And so sure, maybe this is just one cycle, and then now this is the start of another one. Who cares? The point is, we've had this huge decline that has given back almost all of this rally. It doesn't matter what the cycle count is. That's not good, right? That is bearish. You can't have a retracement that gives back all of the rally. That's not an uptrend by definition, right? And so if we're counting it this way, calling this whole thing still one cycle, so we have a top on day 23, which is interesting. This was a top on day 22. Just a coincidence though. And then we declined for 9 days into a day 31 low. I talked about this in the last video. So again, this is also a technically right translated cycle. But I guess you can argue, is this really bullish? We've made this kind of double bottom here. So sure, you could argue that it's kind of bullish, or at least it's not as bearish as it could be, I suppose, is the way you might kind of frame that. These are higher low, or excuse me, this is a higher low than this one, and this is actually a slightly higher low than this one, so that's cool. So let's count this as your daily cycle low. That would mean, so actually, this would be day 1 of your daily cycle. This would be day 2, day 3, day 4. And so it could be that we're going to make another low, maybe kind of test this area again and then kind of bounce out of it. In my mind, that's, you know, well, let's see, 1, 2, 3. So this is day 4. And if this is not day 4, then alternately it's day 35, right? I think that's the easy math to do. You can always just add this number to this one. That's a rule of thumb. It's an important way to think about it. Cycles are not kind of set in stone. You only know, like, really in hindsight how, like, really clearly, okay, this was definitely one daily cycle. And even then, that's not always super obvious. So right here, what we want to be watching for is making another lower low. So we already made a lower low below this one, and I hope you guys are starting to catch on. A lower low creates a swing high. That's literally how it works. If you get a lower low, by definition, you're getting a swing high. Think about that. So this lower low, we'll zoom in, that this candle just made, makes this candle a swing high, right? And remember, we already have a swing high from this candle when we went below that low, right? So that's important to understand that level. So let's see, the low from this candle is 1855. So that'll be an important level to kind of understand. We'll see with more clarity how this is shaping up in terms of like the count, I should say. But the low from yesterday, so, and I should have mentioned October 19th, Wednesday night. So the low from yesterday, Tuesday, was 1837. And we're right now at like 1838. So it looks like we're most likely going to make a new low. Now it'll be a question, do we get a reversal candle like this one, right? Something like that with like a lot of lower wick because the you know, the breakdown doesn't hold. Either way, this is bearish. Now, the weekly chart gives you more, like the weekly chart gives you more levels to work with in terms of understanding exactly how bearish this is. Now, I talked about this in the last one, that like this big candle, and this is also similar to the situation with uranium with CCJ, where you have a pretty massive red candle, and it also has no wick. So it's like, it's just not doing you any favors, right? And now this candle, so this is your candle from last week, you know, the week of October 10th. And this candle right now is an inside candle. Again, forget the cycle counts for now. Again, I'm talking price action. That's what you want to focus on. This is just an inside candle because the low from that last week was, we're still above the low from last week, which was 1809 approximately. And we're still way below the low. So we're in between the low and the high, which is another way of saying we're just in the range, same range that we were last week. So an inside week. Do notice this line here, this blue line is your 10-week moving average. The yellow is your 200-week moving average. And so we got up to the 10-week moving average, and then we've pulled back hard, as hopefully you know now. And a pullback always, well, that's not true. Well, generally, I'll say it's the other way around. An upper wick is always a pullback on a lower time frame, in the same way a lower wick is always a rally on a lower time frame. So, and obviously we saw the lower time frame. It's this thing, right? That is what created, or excuse me, this is what's creating your wick here. This red monster like drop is what's creating this monster candle. That's the multiple time frame analysis. You have to understand how these candles work together. The lower time frames cascade and create price action on the higher time frames. And so if we go back to the levels here, the other thing to pay attention to is when a candle goes from green to red or red to green. So in this case, this candle for this week opened at $18.25. $18.25. The opening price, that's your bull bear line. And it makes things pretty simple, right? If we're above the opening price, candle green. If we're below the opening price, candle red. So this candle, again, opened at $18.25. We're right now at $18.38. So we are green, but slightly green. We're getting closer and closer to going red. And that's how it works. First, you have an upper wick. And that's assuming you've rallied some from your opening price. First, you develop an upper wick, and if you continue to see bearishness on the lower time frames, you continue to make lower lows, the candle on the trading time frame and the time frame that you're looking at is gonna go red. So again, once we go below 1825, candle goes red, and that's your sign that we're about to make that test of the low 18s, like probably cut below 18 to make a new low on the weekly chart. You want to make sure you understand how that works, because candles transform, or I should say, they're changing. They're constantly changing until they close. Right. The closer you are to the close, the more confident you can be in what the candle is going to look like. So you want to make sure that you're paying attention to that. Like this candle, this upper wick, that was a sign. That was not okay, well, that's not good. We closed here, and then the next week we opened here and then just dumped, right? That was your swing high you saw on the daily. And so we're going to be watching for, so one signal we're watching for is the weekly candle going red. The monthly candle, if we move on to the monthly chart, is already red. It was very green before. It opened, the monthly candle did, at 1898, right? So once we slipped below, 1898, right? So once we slipped below 1898, and here we are down at 1837 and counting, going lower by the minute, we became a red candle. I mean, then again, to that point of candles transforming, constantly changing, this was a very green, bullish candle. It made a higher high. It made a higher high above this. And then we just had a massive fake out. So this is shaping up to create a bearish outside candle, which means we already made a high above the previous candle's high, and now we've gone red. So the presumption is we would make a lower low, so that's below 1756. If you want to just point out other examples. So this is kind of complex. But this is a compound outside candle, right? This candle here. Because notice, this candle makes a higher high above this one. And then instead of making a lower low below this one, it runs out of time. But then we do that the following month. So if you combine these two candles together, they're an outside candle of both of these candles combined together. That's a more advanced concept, but that's an important thing to kind of understand. It's like you're not out of the woods just because the candle closed, right? Like you can have it, the bearishness continue on the next candle. And if we go back to the weekly chart to get a sense of like the count, I know people want to understand the count. It looks like we had a really long weekly cycle that ended on August 29th at 31 weeks. And that's always tough. When you have a cycle that's much longer than cycles usually are, you're now at a point where it's like, okay, this is most likely a weekly cycle. This is most likely the low because we're so late. And so if we do get an early weekly swing high, that increases the odds that is actually your ICH. That's your weekly cycle top. And we're going to get a pretty long decline from there. And I think that's what's happening here. We are setting up for a longer decline in terms of time. And we'll obviously see what that means for price. So this weekly cycle low that we made here on the week of August 29th, we then got our swing low 2 weeks later. So we didn't get a swing low that next week, but we got follow through finally the week after that. And it's like, okay, this is a new weekly cycle. At this point, you could say, okay, this is probably a new weekly cycle. We moved above the 10-period moving average, right? So that was the week of September 12th. So we're still talking at this point over like a month ago, right? The following week, you have this inside week, but it's red, not looking so great. And then you get bearish follow through, but then you get a reversal, right? Like this was a very red candle. Again, that idea of how candles change. This was a very red candle that then went bullish. And then you got follow through, another green candle, but then you got a pullback. And that was week 5. That was when you made your weekly cycle, your high for the weekly cycle so far. And then you came in here, you came in the next week. And once you went below the low of that candle, I marked that line right there. Boom. That was your weekly swing high. That was your indication like, uh-oh, bad news bears. We may have a weekly cycle high here. That's not good, right? And this following week, this week that we're in right now, we have 2 trading days left. We rallied up to the 10-period moving average, but notice where that also corresponds with. Not a coincidence, I don't think, right? Like this area is where we opened, right? And so it's not surprising that that area, again, not the specific level, but the zone, the area, there may be some reaction. Price may have some reaction. In this case, the reaction was to pull back, and we didn't even get to that level, and we pulled back, right? So it acted as resistance, a supply zone, if you want to call it, right? So all that to say, this would seem like we are getting a weekly cycle, like we got our weekly cycle high on week 5. And if we just do a little scenario planning, let's just say we get a short weekly cycle, because they happen sometimes, right? And let's just say we get a short one at 20 weeks. That would put your low at... That would put your low at... Sorry about that. Okay, so that would give your low right around mid-January. That's if we have a 20-week cycle, but they tend to be closer to 26 weeks. Like you can see, that was 27, 27, 26. This was a short one at 18. This was a really long one at 31. So maybe we get a shorter one to balance it out. So if we get a 20-week cycle and it's week 7, you can do the math. That means 13 weeks of declining. Now, it's not going to happen in a straight line because we're going to make lower highs along the way. But that kind of gives you a sense of the kind of bearishness we may have ahead of us. Now, as always, we'll watch the price action. Maybe we get a violent bullish reversal at some point. But failing that, we are heading lower, like is the immediate trajectory. We'll now flip over to gold. And for gold, the big thing here is we are declining into the 8-year cycle low. I don't know why it's so hard for people to accept that, which makes sense that we're also seeing the bearishness on silver. So we'll start with the daily chart. So for gold, we had a short daily cycle here at day 19 days. Then we rallied. It's hard to argue that this is not a daily cycle low. I think some people are starting to say, oh, wait, no. Like, this is actually not a daily cycle low, and we're still declining into the daily cycle. Let's look at what that count might be, right? So if this is day 5, this is 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. So like if you combine these, just really quick math, 17 plus 19 would give you 36 days, right? So that's your sort of hopium way to look at it and say, oh, well, actually, this is not a daily cycle low at 19 days. We're actually on day 37. And we had a daily cycle that was 47 days that went, one that was 42, one that was even 55 way back here. So that's entirely possible. But going back to that point, it's about the price action, less about the cycle. Like, what is this right here? It's called a downtrend, right? It's like very clear. That's a low, that's a high. Like you can kind of see these little retracements. Like, are we going to do something like that, right? And this is just your daily chart. So if you think about if you accept the idea that this was just a short cycle and we're now on day 17 of a new daily cycle, maybe we're going to get another short cycle, right? Maybe that bottoms around day 20, 21, and it's some kind of double bottom. That's possible. If we look at the weekly chart, this is where the weekly cycles are a little bit more squirrely. So this looks like a weekly cycle low on week 31. You could argue that this was one as well, but the fact that we didn't close above the 10-period moving average, and again, this is where you can kind of quibble. From my perspective, it doesn't really matter that much because this is a like super crystal clear downtrend on the weekly chart, right? Like, I hope you're seeing that. Like, it's like, I mean, this is like if you looked in a textbook for what a downtrend looks like this is a good way, like for a novice that can't read a trend, to just kind of look. This is like almost picture perfect in a way, right? Like, sort of, it's kind of, like you can see it, right? Like, and that's why I drew this. So hopefully it's more clear. But like, we are declining. The count is a little bit less important, right? And so this was a swing low, right? And so one interpretation here, right, is that this was the start of a new weekly cycle. This was week 3 that we had this high. We declined into a swing low on week 10. We bounced, made a lower high, way lower than this high. Like nowhere, we didn't come anywhere near that high, not yet. Again, miracles happen. We could get a miracle here, but so we made a lower high, and now the presumption is we would make another lower low. So below this low, making fresh lows and again, continuing the the 8-year cycle decline. And I'll talk about that. I'll go to the monthly chart, but that's the big thing to keep in your mind. If we're declining on that long a time frame for gold, it's going to drag everything down with it. And so the weekly cycle count here would be week 11, week 12, week 13. So pick your poison, take your guess. Is it going to be a 20-week cycle? Who knows? I say just watch the price action, wait for the downtrend to end. And I would argue, wait for the downtrend to end on the monthly chart. And I talked about this, like, things don't like to move in a straight line, but this has kind of. So at some point, we'll probably get some kind of bounce, even if we're going to get a plunge down to what I would expect somewhere around the 1450 area. Because, like, I mean, this has just been down only. We haven't even had a red month, or excuse me, a green month since that blow off top in March earlier this year. And so, but more importantly, this is month 82 of the 8-year cycle. And these things are not perfect, but if it were exactly 8 years, it would be 96 months. And so that gives you a sense of the kind of downside we could still have if we're only on month 82. But it's also possible that it could bottom maybe even in 7 years, and that would only be 84 months, right? That's not that far away, right? Like, that's a couple months. But I mean, if you can look at this chart and tell me it's not like declining, it's just like so it tells me you're being biased or you don't understand how to read price action. Another thing I would just add, just context here, is this line. I've started to add these because it's just a good reference point. This is your 50-month moving average. This is your 50-period moving average. Because this is a monthly chart, it's your 50-month moving average. Notice we did not close below it in September. We are on pace to close below it here in October. That'll be a good thing to watch out for. And I believe silver actually already closed below it, right? So silver closed below that moving average in August. Something that's below its 50-month moving average, by definition, means the price is lower than the average price has been for the last 5 years. That's just telling you that we're in a long-term downtrend. You don't really need that to know that we're in a long-term downtrend, but it does add that context. The other thing I'll call out is this yellow line, this 200-week moving average. Again, this is back to silver. Notice we've been below the 200-week moving average since July, like the middle of July. And we've had a few bounces that got back up there and then just pulled back. These are all red blinking lights. If the simple trend analysis, lower lows, lower highs, wasn't enough for you, this is like a blinking red light. Oh, wow, we're below the longer term moving averages. This is your 10-week moving average. Notice it crossed below your 200-week moving average, which is another way of saying the short-term moment. Like, we are basically sort of sagging on that nearer term time frame, which is why because the 10-period moving average is a shorter term time frame. So if something is in an uptrend, that 10-period moving average is going to be higher than any long-term moving average. So when you see it slip below that, that's a bad sign. And you can see gold is about, oh wow, gold is just now doing that. Again, there's nothing magical about this. You certainly would have been late if you waited for this to happen to get bearish. This is just a later lagging indicator that further confirms, like, if you can't read a trend by lower lows and lower highs, then this moving average will tell you that. And so that's the picture for gold. And finally, we'll look at GDX really quickly. It's all really the same kind of idea, although the days are different. Again, so this is 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. So day 17, and we're actually really just kind of consolidating inside this range that's a bit important from this candle, this big bullish candle. So you would expect we're going to test 2247, and you want to see how we react to that. That'll tell you if we're going to make fresh lows. I suspect that we will. Again, broader, bigger picture, we're in that 8-year cycle decline. And this is one where, right, like, this may be all we get, right? Like, this may be the lower high that we're going to get for this weekly rally, and then we're going to just kind of see more downside below this low here, this week 35 low. And I've drawn this box because you can imagine a little bit of an acceleration to the downside once we get within this kind of price range. This is where we saw a rapid move down and a rapid move up out of that COVID low, where you can almost think of that as like what happens when there's like the biggest liquidity crunch. And for this one, 200-week moving average, look how far below that we are. We've been below that since June. So this one was below that before silver dropped. And we've gotten nowhere near it on subsequent bounces. That's not a good sign. And finally, the monthly chart is setting up for the same pattern, bearish outside month. So that means we're setting up for a move below 2150. We're up here at 2289. Oh, so that's still a good short opportunity, actually. So that is the picture for the precious metals, gold, silver, and the miners themselves. As I continue to remind, we are declining into the 8-year cycle low for gold. That would mean that precious metals are going to get dragged down with it. Wait for the downtrend to end. And I'll tell you, I will be the first person to be screaming it from the rooftops that the downtrend has ended. But I'm just preaching patience here.